if there is no major correction, you may tend to see some sort of rally into these sectors.
All right, let's just quickly take a look at what has happened to the Nifty, and we are joined by our guest as well. But Nifty at pre-open, it's actually gone into the green, and that's why we're breaking with tradition today. All right, gone back into the red, but it opened about 88.06, right where we had expected it to open, around that 88.06, 88.07 level, and now trading at 88.31, which is almost at where it closed on Friday. The Sensex is hovering between green and red at the moment. So that's what's happening in the pre-open space. I'm joined right now by SV Prasad and Ruchit Jain. Thank you so much, gentlemen. We'll also have G. Chokalingam and Imtiaz Qureshi joining us in a short while. Good morning. As usual, our viewers wait for your picks, so let's get them out first. SV.
It's a tough call. That's why I continue to stick by what I've been mentioning for quite a few weeks on there. One is, of course, both SBI and HBCL now more on declines, because with the way the market is going, I think as a general advice, what I will tell people is look at your asset allocation, because if a person has a specific debt equity allocation, equities have obviously gone up. I think it's a good time to revisit your allocations and balance your allocations. So that's a general observation. The only other name I've added to the pack is a bit of a surprise name, Sun Pharma. I must also admit that I have a small holding in all these three stocks, SBI, HPCL as well as Sun Pharma. I think Sun Pharma time has come for the stock to kind of come back, because it's been beaten quite a bit largely because of the ex-Ranbaxy problems and some of the FDA related problems. I think they are past it, and this is a good solid defensive stock for these markets. That's why I've taken these three picks as far as I'm concerned, because let's face it, markets look like a decline could happen anytime. More of a technical decline could happen anytime. Of course, you mentioned about the election results, and I was actually traveling extensively in UK and Europe recently, and gauging a mood of investors as well as public at large in terms of Brexit on both sides. Surprisingly, UK is a lot more positive on the Brexit. Europe is obviously quite seething. I only hope that if the US elections goes against what the pundits or what the markets are expecting, God forbid, I hope a similar kind of trend emerges as well, though it's a totally different scenario. But clearly, the biggest risk is the US elections now. There's no question about it.
All right, biggest risk, US elections. Ruchit Jain, your calls.
Yeah, hi, good morning. Well, from trading perspective, initially we are recommending to go short in Nifty future itself, keeping a stop loss above 89.20, expecting a target around 8715. My second call is a buy call in Jet Airways, probably not a part of index, but we are expecting some sort of outperformance in this stock. Keeping a stop loss below 532, one can go long in Jet Airways for target of 570. And last call is a sell call in ACC with a stop loss above 1645 for target of 1575.
All right, so two sell calls. G. Chokalingam joins us. Choka, let me get your picks first. That's what our viewers wait for in the morning.
I'm little worried about the small and mid cap stocks at this juncture. In the last 1 year, if you compare with the September 2015, the market cap of small and small mid cap stocks have gone up by more than 110-20%. The way to look at it is you take the difference between the the BSE 500 market cap and all BSE listed market cap. That difference is now zoomed more than 100% in the last 52 weeks. Many stocks there is no valuation comfort. So therefore I am expecting some burst in small and mid cap stocks which are overvalued. Therefore at this point I suggest some tilt towards large cap stocks. So that's why out of 4 stocks I have chosen 2 large cap stocks. One is a Coal India. I have a target price of around 400. I expect some re-rating to happen. Globally, the coal prices have gone up by 40% in this year. And in fact, metallurgical coking coal has gone up by more than 100%. In fact, in country like Indonesia, coal mining stocks have already doubled. Right. So whereas Coal India has not performed to the same extent, Coal India is still sitting on a cash of more than 35,000 crore. So apart from buyback, I won't rule out the possibility of even another special dividend. The second large cap stock is Axis Bank. Friday it has corrected about 6%. I feel it's an opportunity. If you compare with smaller bank like IndusInd Bank, which has got a business which is 50% of what Axis Bank has got, there is a huge discount for the valuation of Axis Bank as compared to IndusInd Bank. So I firmly believe that Axis Bank, which is growing its business at a strong double digit as compared to the industry growth of around 9.8%, would overcome the current stress in the stock prices. Other two mid-cap stocks are basically RCF. Last couple of days RCF has announced a lot of expansion plans. They are expanding the urea capacity. They are also setting up ammonium plant, and they are also setting up a joint venture in Iran, and the output of that joint venture would be sold in India. It has got a strong balance sheet. The debt, if you net out the cash, it's almost a zero debt company, and one of the urea plants is the most efficient in the country. So for long-term investors, I would suggest strongly RCF. The last one is Andhra Sugar. Though the name is sugar, now the chemical and pharma account for nearly 80% of the total turnover. Sugar accounts only for 20%, and it is available at a single-digit PE of around 78 times current year earnings, and it's a very cash-rich, investment-rich company. In my view, the replacement cost of plants, investments in subsidiaries like Josil, joint venture like Andhra Petro, and then Andhra Gas Power Corporation, all these run into more than 2,500 crore, whereas market cap is only around 600 crore. And here, you have about 80 promoters sitting on 1 to 2% stake to the extent of 47%. So in the long term, there could be an opportunity in terms of consolidation. And as I mentioned earlier, in terms of valuation also, it looks extremely attractive, and it is paying dividend for almost 4 to 5 decades without any interruption. So therefore, I suggest this stock.
All right, we'll come back to you, gentlemen. Let me just quickly go through some of the stocks and news, and then I just want Pankaj to take us through the new listing today. Some of the stocks and news today: Gujarat Pipavav, they're going to be, the parent is actually going to bring all its various logistic businesses under one company, and Macquarie is positive about that. ONGC is going to be buying a stake, and it's got an approval actually. The board has now approved for preliminary talks to buy a part of GSPC's gas block in the KG basin. This is a difficult gas block. ONGC has been reluctant to buy it, but the Gujarat government is keen that GSPC's gas block be sold so that it can reduce its debt. Vardhaman Textiles, 61.3 lakh shares of buyback at about 1175 shares. This is through a tender process. The promoters themselves will also participate. 15%, according to SEBI guidelines, will be left for small holders. Piramal Enterprises, the board has considered an early redemption of NCDs on October 10th. Is going to consider that on October 10th, an early redemption of NCDs. Canara Bank, it's going to raise 1128 crores through a rights issue. KNR Constructions, board will consider subdivision of shares on the 30th of September. Dilip Buildcon, it's got two separate EPC projects, one from NHI and the other from the Ministry of Transport and Highways, and the total amount is about 963 odd crores. One is 613, the another 350 crores. One in West Bengal and the other in the south. Two big orders. Monte Carlo Fashions, it's got ICRA has reinstated some of its ratings for its short-term debt, and its long-term debt has been upgraded right now. India Glycols, it's going to be issuing securities of about 250 crores. That's a dilution of 61%. India Glycols there, and then there's L&T. It's going to be raising funds of about 9,000 crores. Two separate things: 3,000 crores through bonds and QIPs, and 6,000 crores through NCDs. IFCI, the Supreme Court has kind of directed the Finance Ministry and SEBI and other stakeholders to actually probe IFCI's exposure to MCX-SX and also its exposure to Satyam. That is going to be probed right now. SR Power, it has lost its control over one coal mine because it failed to make payments, clear payments in time. That's what the Economic Times is reporting, and it's being banned for 1 year. That's what the Economic Times is reporting, from bidding for any further coal mines. ILED and FS Engineering, that's also got an approval to issue securities of 500 crore, and that is a 71% dilution. So these are the stocks in news, but there is a listing, GNA Axles today. Pankaj, take us through that.
Well, Anand, the listing will happen at 10 a.m. So in the next 50 minutes. But the response to the listing was very, very strong, or to the offer, sorry, was very strong. 54 times. It's not a very big issue, not some, not even about 200 odd crores. So 54 times. But the overall response from HNI category was very good, about 217 times. It could be because of leverage money. It could be because of expectation that allocation would be low, that the overall subscription numbers went up. As I told you, it's not a very big listing, so 130 crores is what they are looking at. Issue price has come in at the higher end. The range of pricing was 205 to 207, so it's coming at 207. We spoke to the company earlier when the offer was open, and it's a diversified, real axle company that essentially it is. What are the client profile like? So it caters to LCV, it caters to MCVs as well as HCV and buses. So almost the entire MHCV space is what this company caters to. They have a capacity utilization of almost 70-80 odd percent. They would be looking to increase their capacity with this money. If you look at the results, they have been constantly growing in terms of CAGR by about 10 to 12 odd percent. Their sales for last year, as per their RHP or red herring prospectus, is 500 odd crores. Their profitability is at about 26 odd crores. Decent margins of about 16 odd percent. Broadly, you get a sense that the street was excited about this issue, and that's why the response is very good. Would not be surprised if a 10, 15, 20% sort of a premium comes in during the listing.
All right, let's just pull up what happened when the Nifty pre-open closed. It actually went back about 0.25%. We'll pull that up, 8808. So that's broadly where we expected it to open. That is where it opened, then went up, went into the green in terms of bids, and has come down again. The Sensex about closed in pre-open at about 1/6% down. We also have Imtiaz Qureshi. Imtiaz, just a minute left for the markets to open, so just give us your top picks at the moment.
Very good morning. I have a mixed call today. Market expecting to open a little bit lower, so maybe the scenario will get a little bit momentum change. But anyways, we have a mid-cap momentum continue. Janta Pharma is the first call where can be going for a buy. We have seen a last session very good breakout, so keep a stop loss of 1960 for the target of 2260. Next would be another mid-cap counter, Kesoram Industry. We had seen a very good pullback in the last session with a huge volume getting built up at a lower level. So Kesoram Industry is another stock where we can go for a long buy with a stop loss of 148 for the target of 192. And lastly, we are looking for the SBI to go short, because last session also we had seen the market coming down because of the bank Nifty showing some sort of a retracement. So the 263 would be the stop loss for SBI, and downside expecting 234 as a target.
Just about 15 odd seconds remaining for markets to open. Pre-open session 8807, 23 points decline, in line with what SGX Nifty was indicating. We should get the opening bell anytime soon. Some of the names like Axis Bank will be in focus. They were down about 5 to 6% on Friday. Some brokerage calls suggesting that it should be looked as a buying opportunity. That's the opening bell. Aurobindo Pharma down about 2 odd points. Asian Paints flat. ACC down about 0.6%. Cipla, there is an initiating coverage from Ambit with a sell. Maybe that's why it's down 5 rupees in the open. Axis Bank is flat with a positive bias. Okay, it's absolutely flat right now, blinking into red and green. Nifty, meanwhile, was indicating a 24-point decline, but right now it's down about 43 odd points. So the decline has been sharper than expected. Reliance Industries 3 points higher, or about 0.3% higher, but it has been an outperformer at least in the last 2 weeks or so. Tata Motors is down about 1.2, 1.3. ONGC absolutely flat. Gujarat Pipavav is a stocks is a stock where parent has done some rejig, absolutely flat with a positive bias, but names like Macquarie are looking at it on the positive side. ONGC flat with a negative bias, about 0.5% decline. They have approved acquisition or a process for preliminary investigation into overall acquisition. Vardhaman Textile board has approved buyback. Buyback price is about 1175, but it's up to 1175, so not necessary that may be the price. 10% is what they are looking at in terms of equity. Piramal about volumes are very low. It's just 450 shares, but a decline of about 0.45%. But we would need volumes to pick up for any sort of meaningful reaction. Canada Bank looking for a rights issue. It's currently trading below price to book value, and that's why any fundraising may not be taken in very, very positively, unlike some of the other private banks that we have seen earlier. KNR Construction is up 5%. They've gotten board meet to go ahead and look at stock split. 450 rupees higher, 750 rupees for KNR, 4.6% higher. Buildcon, they've got a good order of about 990 odd crores, 5% higher, 246, 247, about 73,000 shares traded for Dilip Buildcon. So even volumes are pretty decent on this thing.
All right, let's just pull up the ones which have the highest turnover, and we wait for about 2 minutes to take that. The initial burst of trades that come in. The top is Vardhaman Textiles that Pankaj was mentioning, 5 and now about 4.9 odd % up on the NSE, moving up as well, 5.2% now. Ad Labs, we don't know why that is happening, 4.5%. Dilip Buildcon, as Pankaj mentions, 963 crores worth of orders from NHAI and the Ministry of Road Transport and Highways. MCX is up about 1.5%. A lot of volumes on Ruchit Decor. Now, this is a counter which I have not seen operating in the recent past. So this is a new one which has moved in. Syntex Industries 1.2% up. Jet Airways, there's a buy call from one of our guests today, 1% up. Wockhardt about 1% up. These are the big buys, but the biggest loser on top volume, on high volumes, on high turnover is IFCI, 4.3%. The Supreme Court has directed the Finance Ministry, SEBI and other agencies to investigate IFCI's exposure to both Satyam and to MCX CX. BPCL is down 1.3%. Now I'm going to ask my technical guest today, because BPCL, HPCL appeared to be looking strong. HDFC, another counter which appeared to be technically looking somewhat strong right now, that's also down 1.3% on very, very high volume. So this is the picture. Let's just look at what is happening in the Nifty space, and we're just going to take a look at which are the biggest gainers and biggest losers on the Nifty. And Dr. Reddy's is the biggest gainers, and it's up just 0.75%. So we've just got about 10-11 stocks in the green and 40 stocks, including Tata Motors DVR, in the red at the moment. ICICI Bank, the biggest loser, 1.5% down. But the interesting thing right now is that you aren't seeing major movements. So the biggest gainer is 0.5% to 0.75% up. The biggest loser on the Nifty is 1.5% up. So no massive movements either side. I know you were saying that the US elections will be very, very important. Why do you think it is going to be important? Is it just sentiment, investor sentiment, big fund sentiment?
No, it's nothing to do with sentiment alone, because we really don't know what's going to be Trump's policies. If he even carries through, God forbid, half of what he is saying, we are talking about after many, many years, globalization getting reversed. So that's certainly going to have a major impact across various asset classes. Equity will definitely take a serious beating, because he's been talking a whole lot of things. Okay, one may charitably say that typically what happens is as part of an election rhetoric, you say a few things, and then you kind of when you're in office, you tend to take the moderate path. For example, even when Obama came, though Obama clearly did not talk like the way Trump has been talking, but even when Obama came in the aftermath of the 2008 financial crisis, a lot of people were worried that whether Obama will carry on with the resuscitation of all the banks and getting the financial system back, the kind of quantitative easing, etc. But Obama stayed the course, because he realized that the whole entire financial system, economic system globally was in trouble. So he got the entire G7, G20 to join hands and take some coordinated action. Now, in the case of Trump, he's consistently maintaining what he has been saying. So therefore, in terms of economic policies, etc., one is really, really worried. Economic policies, even in terms of political and military moves, if one may say. So these are certainly matters of huge concern, on as far as I see it. It's really matters of huge concern, and if he comes to power, I think there would be major ramifications. Like even when Brexit happened, nobody expected Brexit to happen. Eventually it happened, and there were quite a lot of implication, and I think we have still not seen the impact of Brexit rolling on now. US election is a much bigger one, because you're talking of a completely different philosophy, and even some of the Republicans, the moderate Republicans, if one may call them, are also not at all happy with the choice of the candidate. And unfortunately, what has happened is Hillary, not suddenly the health being an issue. Now people are worried whether Hillary would be able to last the 4-year term. That's the main thing. Otherwise, I don't think the point difference would have been that much. It's more a concern of whether Hillary would be able to handle the pressures to do with the office, and why is she not revealing her health issues, etc. So that's the main concern. So that's one space I would clearly watch out for. Till November, I think it's going to be very, very important how the US elections pan out.
Choka, do you think that the markets will take a pause, especially if the US elections in the run-up to 7th November, if Trump actually goes ahead or comes closer to Hillary, and these debates they get reported, this is the first of the debates tonight, then there'll be these panic moments and the markets will sell off and at least consolidate for some time?
No, I have different view. What can happen is that for 1 or 2 days index can fall, maximum 1% or 2%. Ultimately, Indian market will worry more about the health of the Indian economy and the corporate earning rather than about the you as a candidate. That's my strong view. We have seen in the past also, only if world economy
up by Indian money.
Pardon?
I mean, how much of the Indian market movement is actually driven by Indian money?
That's very difficult. Only the politicians can answer. The point is that
I'm talking about funds. Choka, I'm talking about funds. When we look at the way in which markets move, on days when we see major sell-off, it's rare that foreign funds have bought and domestic funds have sold. Usually what happens is that it goes down because foreign funds have sold.
Yeah, that is true. We have seen ups and downs post-Lehman crisis in 2013. But the point is that, in the world, there are only 2-3 economies provide a good opportunity to invest. India is one of them. We have seen in post-Lehman crisis, almost $16 billion going away, index coming down. But that was more to do with the panic reaction. But according to me, if there is any dramatic policy changes towards IT exports from India, then you can have a problem. Today, whether we like it or not, both IT and pharma, they depend heavily on the US economy. So only to that extent, if there is any policy change, otherwise, the global market reacting to the election results can have impact for a few days. After that, we will be back to normal. Look at, the way Indian market has adjusted to QE withdrawal and initial dose of 25 basis hike in the Fed rate. So ultimately, the domestic factors what would matter a lot in my view.
All right, you were saying, Choka, earlier in the morning that you are starting to get worried about the small cap and mid cap space. Would you advise people to basically take profits off and just sit with cash for a while before even if there's a sideways correction, at least in terms of inflation, you'll get a better entry point?
No, certainly. I mean, as I mentioned, the small cap and low end of mid cap stocks, their market cap has gone up by almost near 8 lakh crore in the last 1 year from little less than 4 lakh crore. Now, most of these stocks are, accumulated by the retail investors where the institutional penetration is almost nil. So the point is that if smart operators take out even 10% of this 8 lakh crore, which is 80,000 crore, or very conservatively, if we assume even 5% of the money goes away, which is 40,000 crore, there is no liquidity in the hands of the retail investors to support. So things can crack. That's what precisely happened in 2015, February to September. Many mid-cap stocks came down by even 30 to 40%. The entire market cap of small and small mid-caps fell by 32%. So absolutely agree with you. This is a time to sell. There are a lot of companies which have become multi-bagger. We have seen sugar theme playing out, then auto component theme playing out. So many themes have played out. In the recent experience, I have not seen many themes playing out in a single year. So this is a clear sign, to be on a, lighter note. I met a school boy who is only 14-year-old. He was proudly telling me that he has beaten his father, in making money in the small cap. So these are real symptoms of, the bubble in the small cap. So one should certainly take out money in those stocks which are certainly overvalued.
Or it could mean that the new generation understands things better. One doesn't know. Ruchit Jain, in the morning when I was looking at some of the setups in terms of the charts, cement, ACC, Ambuja, they did look weak, and I can see that I think you have a sell on ACC. Yeah, you have a sell on ACC. But on the other hand, one looked at HDFC Bank. The charts there seem to be reasonably strong, or even HPCL, BPCL, they seem to be reasonably strong. They're still selling off today. So what would you do, let's say, with HDFC and HDFC Bank? Let me start off with that.
See, probably HDFC Limited, if we observe some last, in fact, 1.5 months, the stock has always resisted around 1450, and on the lower side 1350 has acted as a support. So in the markets, usually when the stocks correct, we see two types of corrective move. One is price correction and second is time correction. So when there is price correction, the prices go down, and whenever there is a time correction, the prices remain sideways and for about some period of time. So in HDFC Bank, in both the stocks, we are looking some sort of sideways consolidation going on, which is probably a time correction within an uptrend. So I think both these stocks would continue to consolidate. HDFC should continue to consolidate between 1450 and 1350. So right now there is no trade setup as in such wherein you would get 4 to 5% upside or even downside in both of these stocks. So I think in both these stocks consolidation would continue. Now where the worry comes currently is the other banking names. If we see some of the large cap names such as ICICI Bank, Axis Bank or SBI, or even some of the PSU banks who do not have much weightage in the bank nifty, they are showing some sort of weakness and a probability of the formation of a lower top around current levels. So we may see some sort of corrective moves in heavyweights such as Axis Bank is there, ICICI Bank is there, SBI, or say even some of the PSU mid-cap banking names such as Bank of Baroda or Allahabad Bank. So HDFC Limited would continue to remain sideways because they are into some sort of time-wise correction. But some other large cap names, I think they would show some sort of corrective move before the expiry.
All right, Imtiaz, in terms of the cement stocks, large cap cement plays, ACC, Ambuja Cements, what are you doing with them? Ruchit already has a sell call on ACC.
Yes, the things looks very much negative, not so much positive for the cement sectors, and I think so. Ambuja Cement, AC Cements looks more on a downward side. But there is one more counter, Grasim, which I'm looking very much positive at the current level, and I think so. If I diversify myself in the portfolio, I think so. The Grasim looks very much promising at this level, and I think so. Around 4800 is a very good support. Risk-reward ratio is very much favorable. So can accumulate Grasim at this level with a stop loss of 4800. And expecting somewhere around 5,100 to 5,200 till expiry.
All right, Grasim, you're saying that 5,200 till expiry, which is just a few days away from now. That's on Grasim. So let's put that buy call on Grasim. As we, Chokha has a buy call on Yes Bank, which is corrected. On Axis, which has corrected. What about these private sector banks? We've seen a bit of a sell-off in some of them. Within that, I know you're saying that go easy right now, don't put all your eggs into any basket. But is there any buying opportunity after that correction, or are you going to wait for more correction to take place?
Generally, one trend which you mentioned right in the beginning, Anindya, was that the markets are right now in a range. And to me, a strong indication comes in when a great stock picker like Chokat, among the names he recommended today, 2 are large cap names. So that kind of sends a message, and he is also clearly saying, which is what I've been saying, that mid cap and small cap have run up a lot and you better lighten yourself. So in that background, and I also mentioned that, look, revisit your asset allocation. If your equities have gone up, especially retail investors, much more, then I think a time to reduce. And where do you reduce? Obviously, you reduce more in the mid cap and small cap space. If at all you want to do a correction, then look at the large cap. As far as large cap is concerned, some of the bank names, you know that I've always been fond of both HDFC and HDFC Bank, except the valuations are rich. As long as one's return expectations are all right, and there could be a correction, because I would still tend to beg to differ with Choka as far as US elections are concerned, because it is a big thing. Granted, domestic mutual funds have a lot more money than few years back. I think last year domestics bought more than FI, but on an overall basis, the sentiment gets majorly affected, and what kind of policies that this gentleman will come up with if he indeed becomes a president. So selectively one can look at some of these big banks. My favorites have always been HDFC and HDFC Bank. At any decline, these are great names to buy. Kotak to some extent in terms of quality. Some of the other names, I have my own views, and therefore I would be a little slow as far as some of the other private sector banks are concerned, because these three banks, the business is very solid. They have stuck to their knitting. They have not tried to kind of try any and everything. So I would not say don't look at these banks. Look at these banks at decline. And the reason why I've liked SBI is because the present chairman has really done a lot of spring cleaning in the bank, because I advise that some of these corporates and some of them bank with SBI should be extremely tough on them. That's clearly giving a signal. Look, it's not business as usual. It's not like business in the past. That's why this is a stock which I always like. I'm not too much of a technical guy, that, right. And that's why I keep saying that look, buy at declines, and if she indeed pushes through these 5 mergers, boy, it's going to be a major plus as far as SBI is concerned. And frankly, India means you have to have SBI in your core holding. That's what I would always mention, especially to any foreign investor, because SBI in some sense is a proxy for India, other than maybe an HDFC or an HDFC Bank.
Right, one final question to Choka. Choka, if you've seen the news reports on ONGC that they've got that board approval to start preliminary talks to buy a stake in GSPC's, that difficult gas block that they have in KG Basin, which initially what they thought is going to be the output, it turns out that it's not even 1/20th, and even that is technically difficult to take out. GSPC has this huge 19,000 to 20,000 crore debt, which the Gujarat government and GSPC has been trying to get rid of by selling a part of that block, and ONGC has resisted. Now it appears it's going to buy it. So when a PSU, a big PSU, kind of is in some senses forced to take stake in another PSU, what kind of signal do you read from that, Choka?
Yeah, unfortunately, ONGC has got already its own problems. It's a 100% subsidiary acquired a lot of oil assets, post Lehman crisis, and now the oil price has crashed. From the 2-year peak, it has come down by more than 50%. Last Friday also, it again fell by 4% below $46. So it's a very painful journey for ONGC. On the domestic front also, it gets affected by the low oil price. And if oil price gets into bull phase, as you said, because of the government intervention, it is forced to share a lot of subsidy. So in this background, what has happened is certainly not welcome development for this PSU. So I would suggest to sell the stock and move on to some other good quality stock or sit on cash.
All right, let me get your disclosures, Choka.
Yeah, none of the stock I have discussed I hold, but most of the stocks we buy for clients, and most of our clients are holding whatever I have discussed.
SV, you have already, I think, given your disclosures as you went along, so I'm not going to take them again. Ruchit?
Yeah, whatever stocks we have discussed, I don't have any personal holding in them, but we have recommended it to our clients, so our clients may be having position in them.
And what about you, Imtiaz?
Personally, not holding any of the position, but the same recommendations Ajanta Pharma Kesoram has been given to our set of clients.
All right, gentlemen, thank you so much for joining us this morning. Pleasure talking to you and getting your views. We're going to take a short break, and after that, Rakesh Arora will be joining us, and also